Okay, let's take a look at IBM today. Definitely a very good basis to any portfolio. We're talking about a stock trading cheap. PE ratio around 13 right now. Cheap, cheap, cheap. What can I say? Definitely a very good consistent stock. Good dividend yield on this bad boy. What can I say about IBM? What else can I say about it? So, if we're looking obviously at the earnings, this stock is up 4% after hours. So let's take a look at these earnings and see what's going on. IBM posted a non-GAAP EPS of $2.18, which beat by 9 cents. GAAP EPS of $1.52, missed by 4 cents. So definitely a decline year over year in terms of EPS, and that's not a shocker. Every company's really going through that right now. So, I mean, we kind of expect it. What I care about really is the revenue. Revenue of $18.12 billion. Down 5.4% year over year, but beat by $400 million. The beat exceeded the forecast of every analyst who filed earnings estimates. Are you kidding me? It beat every single analyst estimates. That's impressive. Debt totaled $64.7 billion. We'll be looking at that balance sheet. You already know it. As far as the CEO is concerned, he says, our clients see the value in IBM's hybrid cloud platform. Obviously, definitely a lot of value there. Based on open technology at the time of unprecedented business disruptions, we are committed to building with a growing ecosystem of partners an enduring hybrid cloud platform that will serve as a powerful catalyst for innovation for our clients in the world. Heck yeah. We look at some of the finer details, obviously. Revenue declined for the second quarter in a row as the pandemic put the expected pressure on cognitive software and global technology sales. Not a shocker at all. But obviously they beat on both top and bottom line. Red Hat revenues up 17%. Global technology services down 8%. Beat the consensus though, so still good on that aspect. Cloud and cognitive software was up 3%. Beat the consensus just barely. Global business services beat the consensus quite a bit. And systems was up 6%, which beat the consensus as well. So all really consensus beats there. Very good to see that. Global technology was down due to the declines in application management and consulting. As obviously less business partners with less companies really, doing a lot of business right now. If you think about it in that aspect, a lot of small businesses completely shut down. Hard to do a lot right now. Total cloud revenue was up 30%. Gross profit margin of 48%, 1% above the consensus. Cash from operating activities totaled $3.6 billion with free cash flow of $2.3 billion. $2.3 billion added to the balance sheet. Love it. IBM ended the quarter with $14.3 billion of cash on hand. You love that. Debt is high though, $64.7 billion. So let's look at the slides they presented for us. That's right, IBM's nice enough to provide slides. So obviously we look at some of the highlights. Cloud revenue up 34% against constant currency, though you do love to see that, that's for sure. Red Hat up 18% against constant currency. More than 2,400 container platform clients. The high value model has 60% recurring revenue and adds 1.6 points to gross margin expansion. Love that. And cash generation is nice. 146% free cash flow realization. From cloud and cognitive software, you see is led by Red Hat and Cloud Paks. Cognitive applications and transaction processes or processing platforms impacted by economic environment. Naturally, and you think about that, obviously, as IBM runs a lot of registers for a lot of places. IBM Cloud's really the major driving factor in a lot of those things when we talk about the software. And with a lot of stores shut down, you see a lot less transactions, so a lot less revenue headed their way. So transactions processing was down 14% year over year. Not a shocker, because a lot more is getting done online as opposed to in-store. From global businesses, we see gross margin was up. You gotta love to see that. Digital transformation drives acceleration in cloud. Continued scaling of Red Hat engagements. More users, that's the goal. client deprioritization, discretionary spending, and projects with long-term paybacks, and a strong gross margin expansion. As you see, gross margin up 2.4 points year over year. Good to see that. Every other segment, though, in this is down. From the global technology services, revenue is impacted by lower volumes in challenged industries. Well, yes, of course. Less business being conducted really all over the market, so not a shocker. Digital transformation drives cloud revenue growth and continued signings momentum with second quarter signings and first half signings growth. Sorry. Phone's going off, so I'm like, what is going on right now? Just thinking about that. But revenue down 5% year over year in that category. And from systems, you see a 6% growth. IBM Z and storage growth reflects client demand for resiliency and offering innovation. Power performance driven by product cycle dynamics and gross margin expansion. Benefits from IBM Z and storage product cycle. Good to see that. Systems hardware up 13% and operating system software down 13%. And a lot of that's just, again, operating systems, as I mentioned. Mostly relates to companies and their registers, and if those registers are not up, as in the businesses are closed, what do you expect? So there's near-term challenges, obviously long-term opportunities. That's what their goal is, to focus on the long term at this point, put in money now and really go ahead and go at it. Let's see if we can. I don't recall. I'm hoping that the balance sheet is on this. There we go. Balance sheet summary. This is a consolidated one, so just take a look at this. It's pretty exciting. So total assets right now, you see as of June 20th, they have $154 billion in total assets against a total liabilities of 133.5. So overall, you don't see much change year over year. You see liabilities dip, but assets really remain the same year over year. So I do like to see that. Stockholder equity has been on the rise since last year, technically. So $20.7 billion in stockholder equity, I should say. So you do like to see that. That's after Red Hat acquisition, obviously. The Red Hat acquisition took a lot of cash from their cash. Why can't I speak? A lot of cash from their cash and marketable securities, naturally. So IBM, I think it's still a stock worth buying. And again, I don't think it's necessarily one that you expect to see massive just growth beast, right? But this is such a consistent play. Good dividend yield on this thing, and it just plays consistently, right? From a 5-year basis, this thing's trading low. I mean, it's trading pretty low. Not even near the highs of 2012, but I do like the stock still. I think it's kind of undervalued right now. PE ratio kind of points that out as honestly a pretty decent tech company. They're getting a little undervalued, so definitely worth taking a look at if you're interested. So hope you enjoyed.